The Australian Financial Review.
Hello, I'm James Thompson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague, a man who's less down and more up. It's Anthony McDonald. How are you, Anthony?
On top of the world today, James.
Fantastic. This week we look at how the supermarket giants were accused of dodgy discounting. We examine the 10 most powerful people in corporate Australia and ask who's going to win the brawl over negative gearing. But first, Anthony, let's start in China, where the government went big this week, launching the biggest stimulus program since the GFC to try and get its battling economy back on track. Now, Anthony, this has been a long time coming. Will the package of announcements do the trick?
Well, James, they didn't quite pull out the bazooka, but they did have a fair old crack. China's central bank, they're trying to kickstart the fledgling property sector over there with a raft of stimulatory sort of measures, things like rate cuts on existing mortgages, reducing the reserve requirements for the banks. So the banks, that should encourage the banks to go out there and lend more, cutting down the size of a down payment you'd have to make on a second house. So all this sort of stuff that's aimed at stimulating on the monetary side. James, it was delivered with a bit of a show, like a big press conference. It was attention grabbing.
Yes.
And like you said, the market had sort of been sitting around waiting for this. We all know China wants to grow its economy 5% this year. It looked like it sort of may miss that target. Maybe it still will. But everyone had been waiting for some sort of response. But I think what has markets most excited about this, James, is they expect that this is just the start of more to come.
Yep.
They think this is just the monetary side, the fiscal side, which is the government spending, things that could help demand for consumption or investment or improve the birth rate even, James.
Yes.
Maybe still coming, the other side of it. And we know, James, when you have monetary policy and fiscal policy working together, it can be quite powerful.
Yeah.
Not that we necessarily know that in Australia at the moment. So, yeah, a significant week, I thought, for markets. James, it feels like this could be a week we look back in a year's time and go, all right, that's when the ASX 200 really changed. That's when sentiment towards Australian miners really changed. That's when sentiment towards Australian banks really changed. And, yeah, I think it feels like a bit of a moment. What about you?
Yeah, I think you're right. I liked a line from a guy called Nick Ferries, who's the chief investment officer at a macro fund called Vantage Point, and he reminded me of that old line: stock markets stop panicking when central banks start panicking, and that's what we've seen. This is, as you said, the central banks, the Chinese government is treating this as an emergency now. Up until now, it's sort of been, we think we can manage our way through this softly. A lot of talk, not much action. And now it seems to be converting into action. We're starting to see some early fiscal initiatives, as you said, and that should continue. I think the only but for me, Anthony, is the property sector in China. It is in a generational hole. Mm-hmm. And I spoke recently to the chief economist for HSBC up in Asia. He said, it'll take 3 or 4 years probably for the property sector to get back on track. It's just so much debt there. Nobody wants to own a property. So does this package of measures reverse that? Because that's what drives 25% of the Chinese economy. That's not healthy long term. So China's right in that it needs to find a way around that, but it's trying to manage this sort of transition in its economy, and it clearly feels it needs to prime the pump a bit more. It's good for Australia. I mean, Anthony, we already saw, as you said, the miners' stocks moved quite sharply. There appeared to be some selling out of the banks back into the miners. Is that going to continue?
I think so. I mean, the story sort of all week since it got announced was sort of like, CBA shares down 2.5%, BHP shares up 2.5% in the same session. So it kind of looked like the money was going straight from one to the other. As we've spoken about plenty on the podcast, that CBA and National Australia Bank, all the big four banks, they're valued quite expensively.
Yeah.
One of the reasons why was because people have been putting money there because they're a bit uncertain about China and they've been selling out of the resources. I just think this could be we might have seen the top of the bank's prices.
Yeah. Well, the big Ds in China still need to be watched. So that's demographics, a very aging population, debt, still lots of leverage in the household sector, particularly. So, and disinflation. The economy is still in a disinflationary zone. So they're the three things that we need to start to see turn. If the Chinese can turn the birth rate as well as deleverage and get some inflation going again, well, the command and control economy will just go to another level.
The 3Ds, that's great, James. I'm going to remember that. Back at home, James, the issue of negative gearing exploded this week when it was confirmed that the government is in the throes of a review of the controversial tax policy. Now, James, this was initially seen as Prime Minister Anthony Albanese throwing a bone to the Greens, who violently opposed negative gearing and holding up several government measures to improve housing supply. But Albanese spent the week claiming it's the public service, not Labor, who ordered the review, and he won't touch the tax break if any changes hurt supply. So, James, what the hell's going on here?
Well, I'm not sure, actually, Anthony. I don't think negative gearing exploded so much as blew up in the government's face. It's not really clear even who ordered this review of negative gearing. Jim Chalmers says it wasn't me. Anthony Albanese says it wasn't me. It's the public service. They're just coming up with ideas. That's what they're supposed to do. They're an ideas factory. We're not going to make any changes. We could make some changes. We'll see what the review comes out and says. It's very mixed messaging. I think the government wants to be seen as throwing everything at the issue of housing affordability, which is fair enough. And look, a review of negative gearing's not a bad idea. It's a controversial policy. There's going to be puts and takes if you make changes to it. So a review doesn't sound like a silly idea at all. But the government has just sort of tied itself in knots trying to explain this. This is back to this theme of housing eating the economy, Anthony. It's eating the politicians' minds as well. They sort of can't have a sensible conversation about negative gearing because it's so polarizing out there in the electorate. I mean, you saw some of the stories in response to this, just the idea of a review. You've got people coming out of the woodwork, property investors, to say, oh, this is the end of the world. I won't be able to own my 62 investment properties anymore. We do need property investors. We need somebody to be landlords so renters can have housing stock. So you do have to be careful, but it's just everything gets so political when we need cool heads to review this stuff. And what we've got is just a bit of a mess this week of messaging. So I guess, Anthony, let's sit back and see where the review goes.
You're right, James. It's just such a political hot potato, this one. That's the thing. For the past sort of 10 years, if you're a politician and you've talked about negative gearing, it's just turned out to be political suicide.
Yeah.
So it's really hard for anyone to take ownership of that review, isn't it? Which is sad because, what's the harm in having a review? Just looking at it, see if it would actually help supply, see if it would bring down prices, see if it would help sort of free up the whole property sector, which we know is constipated.
Yeah. I think housing to me is like the other great sort of existential issue of our time, climate change. We need to throw everything at it. We need to be looking at it from every angle, lots of different solutions. So a sensible, holistic review of negative gearing and indeed all property taxes seems like a pretty smart thing to do as we try and lean into this crisis and find solutions. But instantly, as you say, it gets polarised and politicised, and I don't think we'll really get any sensible policy out of this. So I guess we'll wait and see, Anthony, but I'm not holding my breath. Are you?
No, not at all.
All right, well, let's move to our first topic of the week, Anthony, and let's have a look at the corporate story of the week. On Monday, the ACCC launched explosive legal action against the giants Coles and Woolworths, restarting this year's political pile-on against our two dominant supermarket groups and putting them back on Anthony Albanese's radar. Now, the ACCC has accused them of basically faking discounts on everyday products like pizza shapes, Colgate toothpaste and Uncle Toby's muesli bars throughout 2002 and 2023. Now, the ACCC cited 266 examples on products at Woolies and 245 examples at Coles. The consumer watchdog said Woolworths and Coles would increase the price materially of a certain product by 15%, for example, for a period of a few weeks, and then reduce it the price of that product, mark it with a down or a prices drop promotion, but the end result was customers actually paying more for the product, even though they were told it was on special. Anthony, it sounds like the ACCC has accused Coles and Woolworths of pretty widespread rorting here. ACCC boss Gina Cascott-Leib seemed to have a lot of examples up her sleeve. Do you think the consumer watchdog's got a good case here?
Well, James, you've got to give it to the ACCC. They've really mastered the art of the pylon. You know, we saw it at Qantas last year when amid the firestorm, we thought it was at its peak, you know, the ACCC launched its ghost flights case and it just went to a whole new level. So, mate, this time, you know, I mean, the supermarkets have been in the firing line since this time last year, right, because of the inflation. And it was a red hot issue earlier this year with the inquiries and the reviews. I think there were 9 of them at one stage, but none of them had really landed any big blows, and the issue had sort of gone off the front page of the paper. But ACCC chair Gina Cascott-Leib, she changed all that on Monday. Like, she got Coles and Woolworths back there on the front page with a juicy 5-page media release and some really simple examples on Oreo biscuits, Strepsils throat lozenges, you know, stuff that we all know.
Yeah.
Let's go to the Oreos. So Oreos were $3.50 for a family pack at Woolworths for nearly 2 years, right?
Yep.
So for 22 days, Woolworths increased that price to $5. So up to $5 from $3.50.
Yep.
Pretty steep increase, you know, expensive bickies. But then they dropped the price down to $4.50, all right? 22 days later, and they marked it up as a prices dropped promotion. So the price was at $5 for 22 days, gets reset to $4.50, when only a month earlier everyone was used to paying $3.50. So that's the sort of examples that they're talking about. And I mean, Gina Cascott-Leib, they laid that one out in the press release. I said to her, like, are the other ones this simple? Like, is it all kind of the same? And she said, yeah, they're all the same. She's like, I haven't just cherry picked the best one.
We haven't got an insight into Gina Cascott-Leib's favourite biscuit.
But I mean, straight away, James, you see that, and
it doesn't feel right.
As a shopper, which, you know, pretty much all of us in Australia shop at Coles Woolworths, it just makes you see red, doesn't it? It doesn't feel right. I think we realise prices have to go up. And remember, the period we're talking about, inflation was through the roof. Prices were going up on everything. But it's the use of those promotions. It's like supermarkets telling us how lucky we are to shop there because the prices are dropped, when it doesn't feel like it was that special after all. I think that's the bit that really puts this story onto the front page. And James, like, the supermarkets, they put in so much work into pricing and promotions. Things like down, you know, like we've been watching TV for 10 years or more, I don't know, and they've got that down in our head, right? And totally. It's so synonymous with the Coles brand. And it turns out that it looks like they've been caught red-handed here and they've been stretching it. So it's going to be very, very hard for the supermarkets to argue to the ordinary person on the street, which are their customers, right, that it's anything other than poor behaviour. But James, like, in amongst it all, and, you know, being the Chanticleer podcast, we should probably go here because it is where it gets a little bit more complex, is there's a legal argument here, right? So the supermarkets say, all right, there's ACCC guidelines that talk about when you can claim something's on special. And it's all about you can only cut the price when it has been at its old price for a reasonable period. Now, James, do you think that Oreos being where they were for 22 days, and at Coles and Woolworths it was similar across both, do you think that's a reasonable period? And secondly, I mean, do you think this is sort of the case that will even make it to the courtrooms?
Oh, let's do the second question first. I think this would be, I think you wrote this during the week, Coles and Woolies will not want this getting anywhere near a courtroom because think of what the case would be. It would be 3 or 4 or 5 or 6 weeks of barristers going through their pricing and promotion strategies. No, thank you. No freaking way is that getting anywhere near a courtroom. This will be settled. They'll pay a penalty, and they'll hope this goes away. That's my prediction. Now, we should say Coles has said it would defend itself. Woolworths is considering its position. And their considerations will get back to this idea of what is a reasonable period. Is 3 or 4 weeks at a price reasonable to then cut it down to a lower price? And this is where it gets hard. You can guarantee, Anthony, that Coles and Woolworths, well before the ACCC appeared on the scene, had lawyers in there who have given them 27,000 legal opinions, very expensive legal opinions, that 3 or 4 weeks is reasonable. And I don't know, it doesn't feel reasonable when it's presented in the way that the ACCC has presented it. I think the other interesting thing here is remember this period, 2022 to 2023. The supermarkets were telling us they were getting 4 or 5 times the usual number of price increase requests from their suppliers because everything was inflationary. The manufacturers of Oreos were dealing with increased shipping costs, increased power costs, increased labour costs. So they wanted to put prices up. They were going to Coles and said, help us out here. We need to put the prices up 10, 15, 20%. I'm not, I don't know exactly in the Oreos example, but that's the general gist of what suppliers were asking for. So Coles and Woolworths have sort of met their suppliers' requests. They've done the right thing by suppliers, but they have done it in this sort of, it feels a bit of a grubby way to me, Anthony. And so that's the pub test. I think we've got 2 things here. We've got the legal test and the pub test. Coles and Woolies weren't in a great place to pass any pub tests at the moment, and they'll struggle to pass this one.
Yeah, I think you got to be careful when you're one of these big consumer-facing companies and you're lucky enough to have millions and millions and millions of customers. Sometimes I think you just can't afford to outsmart yourselves with lawyers and taking their advice on such simple sort of everyday issues.
Yeah. Anthony, you mentioned how good Gina Cascott-Leib's ACCC has got about landing these punches. She's got a great sense of theatre.
Oh, yeah.
I mean, she's as we've said before, she was the former top competition lawyer in the country, and now she's using all those tricks on her old colleagues. But good on her. This is what I reckon Australian taxpayers out there want the consumer watchdog to be doing. That they want the consumer watchdog to be, in the supermarket aisles, looking at the prices of Oreos and throat lozenges and saying, this doesn't feel right.
As you just said, I think this is where the ACCC is at its best. Like too often, we're talking about them because they're caught up in nonsense assessing mergers and coming up with counterfactuals and trying to define markets in the future that is impossible, right? It's crystal ball stuff. Like you cannot predict it. You'll always get lawyers arguing about it. Like it's really, really hard to do. But this is just simple consumer protection. James, like at the end of the day though, right? Like everything we've seen around the supermarkets this year, all this political heat, it's supposed to be about lowering prices, right? At the end of the day, that's what matters. Now, James, do you think there is anything in this, though, that actually helps customers with the cost of living and could lower prices?
Probably not. No.
Yeah.
Perhaps I'm wrong there. I mean, there is a bit of there is an argument to say that this case will weigh on the way Coles and Woolworths approach discounting in the future. But will it weigh on their approach to say, all right, well, we're just going to stick the prices up? If you don't want discounts, if you don't want downs, then we'll just react to what our suppliers are saying. We'll put the prices up. And away we go. Will Coles and Woolworths try to be more transparent and say, instead of a down sticker on the shelves, it'll be price change due to request by supplier? Will they try and sort of share the blame for a price increase? Prices aren't going down in a hurry. The economy has reset. We all see this in our insurance bills, and our energy bills, and people's pay packets. Labour's more expensive. Energy's more expensive. So much stuff is now more expensive. So we're not going to see prices go down. But I think this may have a bit of a restraining impact on the supermarket giants. They'll have to win back trust with their customers. The best way to do that is by more discounts. Done in the right way. So perhaps there's a bit of cost of living relief there. But we do get back. I mean, the ACCC's put out a report on Friday, the interim report as part of its grocery inquiry. The headline sort of takeouts, the supermarket sector is relatively concentrated. Well, yeah, tell us something we don't know. We're spending 20% at a minimum of our income on groceries. Again, tell us something we sort of don't know. Suppliers, guess what? They feel like they get a raw deal too, and they would like to the supermarkets to let them charge higher prices and give them a better profit share. I mean, tell us something we don't know. So what's the answer here? A bit of this stuff is sort of unpalatable, but with great market power comes great market responsibility, and Coles and Woolies have just got to wear this stuff. The scrutiny on how they're using that market power. Are they using it correctly? Are they using it fairly? I'm sorry, it just needs to be constant because they're such a big part of the market, and they'll have to get used to it.
James, let's move to our second topic, and this is a big week at the AFR where we published the Power List, which ranks not only the 10 most powerful people in the country, but also the 10 most powerful people across various sectors like property, education, and deal-making, and of course, the corporate sector. James, you helmed this list for us, which was put together by a crack team from across the paper. Let's start by counting down from 10 to 1 for the corporate sector. Who were they?
All right, so at number 10, we've got John Mullen, who is the chairman at the moment of Treasury Wine Estates and Brambles, and also is now the chairman of Qantas.
Yep.
So he's the chairman of the Chairman's Lounge, as you like to say, Anthony. At number 9, we've got Kerry Stokes, of course, owns a big stake in the Seven Group and particularly Seven West Media, one of the biggest media empires in the country. At 8, we've got Ken McKenzie, who's the chairman of BHP, but he also runs a secretive school for CEOs. So ASX-listed CEOs do a course that Ken has set up and has become very influential through that. Number 7, Shamara Wickranamayka from Macquarie Group. Number 6, Andrew Forrest, Fortescue Metals Group, Chief Executive Chairman, I should say. Number 5, another mining magnate, Gina Reinhart. Number 4 was Debbie Blakely, who is the Chief Executive of HESTA, one of the giant industry funds that represents the health sector. Number 3 is Mike Henry, the Chief Executive of BHP. Number 2 is Mark Delaney. He's the Chief Investment Officer of Oz Super. So obviously one of the biggest super funds in the sector, $341 billion under management, also was sort of pivotal in blocking that Origin Energy deal and hugely powerful across the capital markets. And drum roll, please, Anthony.
Yeah.
The number 1 most powerful person in business is Matt Comyn, the Chief Executive of CBA. Probably no surprise.
Yeah.
I reckon probably our most visible Chief Executive.
Yeah, great list, James. I think we've got a bit of everything there, don't we? We've got the few CEOs, few chairmen, few investors, a couple of new names as well. I thought it was actually a really good round list, and I love seeing John Mullen on there, just personally. I know he only snuck in at number 10, but he's come into Qantas a bit hot and heavy. But I think he's one person that's really worth listening to. Can be a bit of a mumbler, but if you hear what comes out of the mouth, it can be very, very good. Now, James, but what's the big theme amongst all this? Like, what's the big story?
Well, the big story, Anthony, is the change in the sort of nature of power. We're down from, I think it's 6 chief executives last year to 3 chief executives this year, which I think shows you how business has been smashed up, piled on, as we've said, as we've just gone through with the supermarkets in political circles. And the voice of business has really been damaged, I think, by this political pile-on. And what we've seen instead is the rise of these super funds being hugely important. Mark Delaney, there wouldn't be a deal that goes on in Australian financial markets that doesn't come across the desk of Mark Delaney's team at Oz Super. And Debbie Blakey has sort of become, in a way, the conscience of the Australian market. You know, she's always, whether it's energy issues, gender issues, pay issues, Hester and Blakey are often the ones who are most vocal on those things. So I think that's the big story here. And Anthony, I mean, as we see that, we talk about the big 4 in banking, we talk about the big 4 in accounting and consulting. Do we need to start talking more about the big 4 in super, or the big 8 as I saw today was, we've got 8 big industry funds?
Definitely, James. I mean, yeah, as you said, I don't think 4 is the right number. We should definitely talk about the big 2. All right, there are 2 that are heads and shoulders, growing faster than the others, bigger than the others. That's Australian Super, Mark Delaney's, and Australian Retirement Trust, $655 billion between them, right? So they've got $300 to $350 billion each. Sorry, they are just giants. So then you've got 3 funds under them who are around the $100 billion level. That's Aware Super, UniSuper, and Host Plus. So chuck them in. Then you've got Cbus, Rest, Hester, nearly $100 billion each. But that club, James, has become incredibly powerful really putting their sort of mark on corporate Australia. I mean, Australian Super is the big sort of powerful one, and I mean that's why Delaney's on the list there. Funnily enough, though, James, we saw a airport auction up in Queensland this week. A company called Queensland Airports, which owns Gold Coast and Townsville airports, and maybe one or two smaller other ones. Now, Australian Super was a bidder in that auction, and that's a sort of auction that a year or two ago, Australian Super would have smashed everyone. Right? Yeah. But it didn't win this one.
Not so, right?
Yeah. And it's funny. I just kind of wonder if we're going to see Australian Super slow down a little bit, particularly on some of this Australian stuff. I mean, we've seen it's dealing with a couple of investments that have been a bit tricky on the direct investments it's made, both in private equity and here in Australian infrastructure, and just kind of wonder whether it's, just rethinking things in there. But in terms of a general rule, definitely those big industry funds, 100%. Like the way they've risen up in the past 10 years has completely changed corporate Australia. James, we've got the corporate power list. We can see who the power players are. I mean, how do you think the business community approaches the next federal election, giving it standing in the community, and what you just said about, they're damaged basically?
Oh, good question, Anthony. I think probably they'll try and be as small target as possible. I don't think that's a good thing. Mm-hmm. I think we would much rather that corporate sector is active in discussions around politics, suggesting ideas for reform, putting itself out there. I think all that's really important. But even this week with Coles and Woolworths and the gun, there's so little to be gained by sticking your head up at the moment. I think we'll see the business community play a relatively low profile. They'll say all the right things about the need for reform, but yeah, I just think their political capital, their credit is pretty low at the moment, and yeah, I don't think we'll hear much from them. What about you?
Yeah, they're in a bit of a pinch, James. Like, it's hard because we think because the business community is copping a lot of heat at the moment, they must be actually making huge profits. But they're not. Like, the reporting season we just came through, the one in August, I mean, it showed pretty much for the second year in a row, there was bugger all earnings growth across the ASX 200 at that aggregate level. And we're going into another year, 2025 financial year, where analysts reckon it's also going to be flat. So it could have kind of been like 3 years of flat profits in a row at the same time when they're copping it in the neck on the political front. Like, they're in a tricky spot.
Yeah, no, absolutely. All right, Anthony, we'll come back after the break with a really interesting question about student accommodation. Back in a sec. Welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday, the newsletter pulls together the best Chanticleer columns from the week and the best bits of this podcast and delivers them straight to your inbox. All right. Anthony, we'll get a little bit more to start next week on China. There's a bunch of economic data, including manufacturing and services activity gauges. So it's too early, obviously, to see if the stimulus is working. But Anthony will get a bit of a sense of how badly it was needed, I guess, from this data on Monday. Are you expecting some more action in the battle for Platinum Asset Management, which I think we talked about last week? They've just rejected a takeover offer from Regal Partners. Is Regal going to come back with another offer soon, do you think, Anthony?
James, I think it's safe to say there's definitely going to be action there. Whether it is just behind closed doors talks, though, or whether it's actually something a bit more public, remains to be seen. If I had to guess between those two, I reckon they'll have their bankers talking and see if they can come to some sort of deal, because if there's one thing we know, Platinum is a seller, Regal is a buyer. There's got to be a deal there. It's just about finding the right terms.
Yeah. All right. AFL Grand Final on Saturday, of course, too. Sydney versus Brisbane. Anthony, who wins?
Sydney,
hometown.
What do you reckon?
There. I think you're right. Sydney's been the best team all year. They've had the best run through the finals. They got the best injury list. I think they might win, and they might even win pretty easily.
Really?
But we'll see. We'd like a close grand final, of course. Well, Anthony, we love questions here at the Chanticleer podcast, and this week our question is from Lloyd from New South Wales. If you have a question you want to send in, you can email us at chanticleer@afr.com. You can send your question in audio form too. Just record a voice memo on your phone, include your name and where you're from, and email it to us. So Lloyd says, I've enjoyed listening to your weekly podcast. It's very interesting, invokes better thinking, and is humorous. That's all your good jokes, Anthony. In a previous episode, you were talking about the student housing crisis impacting the revenue we get from international students. Don't the universities have the responsibility of investing some of their inflows into student accommodation directly or indirectly to ensure that the students have a place to live? Traditionally, universities had a lot of surplus to invest, but I'm not sure whether this is the case now. Anthony, this is a pretty vexed question, isn't it? And we were both at the Property Summit last week. Student accommodation was hot, hot, hot. I think Blackstone and Brookfield are both into it. And the universities don't have the massive surpluses that they once had, but the government is trying to put pressure on them to increase accommodation to meet higher student numbers.
Yeah, that's right, James. I mean, international students is Australia's fourth biggest export. Now, if it's going to stay there, the universities are going to have to help with the housing situation, right? I think that pressure's become pretty clear, both politically and from the universities themselves. You're right, the universities don't have the surpluses that they used to. But what we are seeing, though, as they fall on tougher times, which they have, a lot of them have surplus land, and they are looking at selling that land to try and raise proceeds. Some of them are sort of selling to developers that can do the student accommodation. Interestingly, James, I'm obsessed with Star Entertainment and the casino company.
Yes.
They had this casino called Treasury up in Brisbane. It was the casino in Brisbane until about 3 weeks ago.
Yeah.
And they just sold the site, the old Treasury casino site. Guess who bought it?
Student accommodation provider?
A university.
Oh,
Griffith University. So I think the universities are definitely aware of this issue. And like you said, the investors, I was really surprised actually at the Property Summit, how much talk there was from those big, deep-pocketed investors about student accommodation.
Yeah, and student accommodation is a global theme too. It's a global theme for these big capital providers. So all around the world, everyone's trying to get their education exports up, and the housing part of that equation is problematic everywhere. So expect to see more on it, I reckon, Lloyd. Well, Anthony, thanks for holding the fort for a big week. Enjoy the AFL Grand Final, and I wish you luck wrestling with that big decision of whether to go to Coles or Woolies for the shop this week.
Mate, I am going to look twice at those down stickers, I guarantee you.
Fantastic. We'll see you next week. If you like the podcast and you want to hear more, consider sharing or giving the podcast a review, as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At the Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to the Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thompson, and Anthony McDonald, and it was produced by Alex Gow and Lap Fan. Our theme is by Alex Gow. The executive producer is Fiona Buffini.
The Australian Financial Review.